Hey, what's up, guys? Welcome back. Thanks for watching. Today is Thursday, the 28th of May, and you are watching the Blanket Trader recap. All right. So let's go over what the market did. Let's start with the S&P 500 futures. Okay, so we had a small gap up here. Let's go into a 3-minute chart. Okay, guys, so here's a image of the S&P 500. This is a 3-minute chart. Really doesn't matter. It won't change if I do a 5-minute too much. But anyways, I have right here on these white lines, these are called measured moves, okay? And basically how I found these is I go and I find two major resistance points. So I'm looking for, on a lower time frame, a big move, okay? So this was the big move, this red line. And then I'm looking for, in that move, I'm kind of looking for the midpoint and where the buyers took place and where the sellers took place. So you can see some buyers stepped in right here and also sellers stepped in right here. And then if you draw this move and you look at other reference points, you can see the sellers stopped right here, the buyers stepped in, the sellers stopped right here, the buyers stepped in, the sellers. So this line right here, I would take and I would call that like a point of control line. Okay, so that's one of my, it's not necessarily a support or resistance, but it's just a control line. Okay, now we got to go ahead and find another control line, and I'm doing this on a smaller time frame. So I would go back and I look, okay, we got a big upside move here, we got a downside move here, we got a quick downside move here, we got a quick downside move here. So I'm looking at where that resistance point is. So you got up to here, and you could see that this line right here is really important. See, you got this big down move. So now that I have this line and this line, I could then measure move it all the way up and down the block. So if I go ahead and duplicate this, you're going to see that all of these moves are just measured moves. Now, of course, I have my own, or levels that I've learned in the market, and some of those are 29.31, 28.42, and these measured moves are pretty close to it. So I took all those numbers that I had, or that I got, I took those away, and I just did it myself with these measured moves. And these measured moves are, like, they are freaking on point. So this just tells me this market is really programmed. But anyways, let's move on. So we have these measured move levels. Okay, I stopped doing them. We got 28.40 something. We got 28.93. We got 29.39. We got 29.80 something. We got 3,030, and then that 3,075 up here. So right now we were going up, we're pushing towards that 3,075, 3,080 area that I've mentioned in previous videos, but we got that quick sell-off towards the end of the day, putting us right back down at this key support level. So we're really going to have to see what's going on. Now, this support level is not only is it just regular old support, but it actually also falls with the expected move for the week. So last Saturday, I went into the option chain and I saw that for this Friday, it had a $75 expected move. Now I took where the market was at on the closing of Friday, and I went up $75 and down $75, and the up $75 would have put us at 3,030. So what happened is we were stepping away from that expected move. We were moving, and we got knocked back down, because that expected move is going to be very important, because there's a lot of risk outside of it on either direction. So the market wants to stay inside that expected move, because that means the market's running efficiently. It means the option market is priced correctly. When the prices get outside of these expected moves, it means that the options pricing was not accurately done, and it's not running, efficiently. So we got to move right back down. Now we're skirting that expected move. Tomorrow is Friday. Who knows what's going to happen? I have no idea what's going to happen. I would assume we come down tomorrow, but we have that top of the expected move. We could just skirt around there. No idea what's going to happen tomorrow, but I'm just showing you what's happening now and what I see now. So we had a move right back into the expected move on the S&P 500. I don't really see us going much higher than this. Even tomorrow, we may have go up, maybe down. Maybe tomorrow's just a chop day in general. So there we are with the S&P. Now let's go over tick reading and how that had helped me today. So I'm going to go over to my intraday chart study and show you guys how I kind of use tick, and I'm going to show you how I used it today, and also the advancers versus decliners. So right at the open, right here was the open at 635. Market open, had a small gap up, pull back, and then his trend day straight up. Didn't even get close to breaking this 20 period SMA. And you could see that as the market dropped, so did the AD. The AD actually dropped almost to the zero line. And what that was basically saying is 50 stocks going up, 50 stocks going down out of the S&P 500, or 250 stocks going up, 250 stocks going down. So what that kind of indicates is not a chop day, but a range day, meaning the stock's going to go up, it's going to go down, it's going to go up, it's going to go down. Not so much a trend day, okay? It shouldn't trend when half stocks are going up, half stocks are going down. So what we got was a trend day. I couldn't believe it. That's why in my Discord group, I said, there's no freaking way I'm selling any of my shorts on this bullcrap run. And I was even looking for puts throughout the day, throughout the end of the day, when I saw the AD flattening out as the stock was getting higher, AD flattening out. And then if we look over here on the tick, so the tick reading starts from right here. Now, as price is going up, you could see that the tick is steady going down. Now, you could see that here's a new high, because we don't count the first 5 minutes in tick. That's what I learned from my mentor. We don't count the first 5 minutes. So we did get a new tick high here. So you're not shorting this. And that's exactly what we didn't do. And price still went up. But as price did get this spurt higher, you'll notice that tick did not get higher. Tick did not make a new high. That's not a confirmation. That would be a sign to get short. So really, that was your short sign right there. To get short in the market. And then eventually we did get that rollover that we were looking for. And also, if you look at the financials, I always carry the financials on my chart, on my intraday chart, because I like to see them working together. And you could see that the financials broke lower and never rebounded. And you could see right here is the financials started dropping at 12.15, and right here the S&P's dropped at 12.15. So it was definitely, that's what you call confirmation, when everything drops together. Now, if you saw the financials start going higher or didn't make such a big drop, then that would not be a confirmation. But here's the other confirmation we got. Okay, so here it was right here that we got that drop. So right here, the market came down, tested our 50 period SMA, and we got that bounce right off of it. Okay, so that was like, okay, we got the bounce off the SMA. Here we go again, ride it up. But what happened is a fake out big drop. And on this big drop, we printed this big tick low for the day, okay? When you get a new tick low, that's exit all longs immediately. That's what that means. So new tick low on the day suggests further price movement lower, and that's what we got, further price movement lower. Me and my guy in my Discord group, we actually took some shorts right here, or at least I did. I called it out. Usually he's following me. And we, it was hard for us not to grab some profit on this, I'm sure. And once we got down to that 30-30 level, we knew to take some profits off, because we knew that's the edge of the expected move, and so forth. Okay, so we know that we're going to skirt around 30-30. We also know that 30-30 is somewhat of a magnet point in this market, just based off past experience of us being at this level and remembering that 30-30 was definitely an area of concern back in the day when we were at it. So if we go back like 180 days on an hourly chart, and we go back up to where 3030 was, you could see that the market was really hovering around 3030. So it got to 3030, back to 3030, back to 3030, back to 3030, and 3030 right around here was definitely like what we call magnet point. It's a point where the market just gets comfortable at. And if we go to the volume profile, if we look at that, you're going to see that 3030 is, right at the top of this big range. So it's here's the range. There's one more range above it. If we did a measured move, I'm sure it would come up right up into the upper edge of this range. So that 3160 is the top of that range where I would expect a pullback, and then the bottom of this range is right here at this 3060 where we hit today. So we got rejected at the bottom of this range. Okay, so this range's support, which would normally be right here, actually acted as resistance right here. Now, I do suspect we come back down into this point of control area, 2982, which I've mentioned a bajillion times in the past couple videos. 2982 was that level that we gapped up on last Tuesday, when the market opened on Tuesday. Monday was a holiday. We gapped up on this 2982, and I told you guys I believe we're coming back to it, which we did, and now we came back. Now I do believe we'll probably come back to it again, unless we break out, which is possible. Anyways, let's get off of that for now. Some trades that we are in: McDonald's, for one of them, wasn't really my favorite trade after the last couple days. They do have their dividend coming out tomorrow, so that should, I don't know what that's going to do really to the market, but their dividend does come out tomorrow. So once that dividend passes, then it's free game on McDonald's for it to go up or down. Now, how I see McDonald's is I had this strong support at this, these are measured moves again. So I went and I found these positions. I just did measured moves, duplicate. So these are just measured moves on McDonald's, and you could see that this top measure move held in as resistance. You got a little head and shoulders here. Boom. I do expect McDonald's to drop more, and we're looking for a drop. I'm looking for a drop into this range because these are actually my bigger measured moves, which we duplicate, and you can see that these are the bigger ranges in McDonald's. If we go back an hourly, they are much bigger, but these are the levels that I got from my study, okay? So you can see right here, this big volume spur, these lines, and if we went back in time, that level down there is definitely going to be a point of interest. You could see over here, right here, right here. So I think I did a pretty good job at pointing out that point of control, and then I also think I did a pretty good job at pointing this point of control. So market gap down right to this level, and you could see we had a lot of fight at this level. So I picked out these two spots. I made a measured move, and you could see that the market got rejected right at the measured move, okay? So if it gets rejected at the measured move, where's it going to come down to? Well, it should come back down into this channel. So I'm looking for a move back up, getting rejected. I'm looking for a move back down into 180 area, okay? So 180 area, and then ultimately I'm bearish completely on McDonald's. So I am ultimately looking for it to come back into that 175 area down here, okay? That's McDonald's. Another one, Apple. Apple, I got the same thing up here, did some measured moves, and Apple had a nice rejection right at the measured move here. So I found these spots in the market, did the measured move, and you can see Apple adhered to it perfectly. So our target on Apple short term 315, and ultimately we're looking for that 308, 305 level on Apple. And even then, it's probably going to go even further down. I am not bullish on this market whatsoever. Even though it does seem like the bears don't exist, even though we saw some selling at the end of the day, it really does seem like the bears don't exist. And one thing I was talking about in my chat room a while ago, I had a training on algorithms, and basically these algorithms are programmed, right? And they got to account for risk because no one person's algorithm is going to be perfect. So when you buy a call, you have a limited risk to the downside, right? Because the stock could only go to zero. So when you buy a stock, you have limited risk to the downside. But when you buy a stock, you have infinite possibilities to the upside. So if you short a stock, the stock could go up infinitely, and you could have infinite risk. So when you short a stock, you have infinite risk. When you buy a stock, you have a defined risk. Okay, so these algorithms typically, for their computer purposes, don't like to short the market because that means they have infinite risk to the upside. Okay, so that's why this market just always goes up and up and up, because these algorithms are programmed only to buy. They're not programmed to sell. Okay, unless it's an algorithm that just tells you what to do and then you do it. But if it's an actual algorithmic computer placing the trades, then the computer is not going to be really programmed to sell unless they really do feel like the market is going to crash, which even then I think that's probably when the market does go down. I think that's human behavior, not so much algorithmic behavior. So anyways, Apple getting rejected at this resistance. I'm definitely looking for this thing to come down. You got the RSI crossover on almost all time frames. Is the RSI and the MACD looking like it wants to cycle lower? And even though I'm not a big indicator user, sometimes they work. It worked almost perfectly on SHOP a few days ago. So this crossover happened. See, I even have it. The crossover happened right here and right here, and you can see Shopify is now coming down pretty hardcore. So I remember I think I shorted Shop at the very freaking top here as this was crossing over and this was coming down. I had the 840 puts that I closed the same day, and the 2 days later, these things went all the way down to 682. Those 840 puts that I had, I paid $5,000 for. The next day, they were worth over $15,000, which I completely missed out on. I made like $500 on the trade, so that was pretty. I was hurt after that, but not a big deal. At least we were right. But just an example of the indicators working and doing their thing. Okay, so that's that. Another one last thing, the VVIX. We've been talking about this. I told you that 110 level is very important. So the VVIX got to that 110 level, or shot below the 110 level today, and as you could see towards the middle of the day, the VVIX started rising. This was also another sign that you could have shorted the market, and this thing started taking off well before the market dropped. And then once the market did drop, this thing started shooting up into our 110 area. I do expect us to get a bounce off this area. I don't expect this to just turn into resistance right away. I do expect this thing to bounce, and that would push the market much lower. I'm actually looking for 2842 to be exact on the market. I think we do come back to that number, 2842. Mark my words on that. Energy was the weakest. Let's look at some sectors today and what was the weakest. So let me bring over a different platform here because this has my sector watch list. And We have utilities, the strongest today. Utilities is a defensive play sector. Everybody needs utilities no matter what state of the economy is in. So utilities was up today, home builders was up, and healthcare was up. Weakest sectors were energy and XLF, which was a given because the last 2 days those were the outperforming sectors. XLF went over 10% in just 2 days. So it was a given those took a break. Technology still down. Technology still is having trouble. We were looking for like a bounce today with that huge reversal yesterday. Yesterday we had a huge daily reversal, but even today they were still weak. Here's Amazon and so forth. Even Netflix had a huge reversal on Wednesday, and Netflix was even down again today, 1.5%. So interesting to watch here. Netflix is building some little support right in this range here of 420 and 410. We'll see what happens if this thing breaks out. You could see a test of this volume high of 380 on Netflix. Right now, markets are flat after hours. You're getting some rejection at some resistance on the Russell 2000. The YM, let's take a look at it real quick. YM hit its point of control, getting a little bit of pullback, and the ES, of course, was moving past its expected move and came back down right into its point of control. Okay, so guys, I'm going to leave it with that. We'll see what happens Monday. Right now is not a time where you want to be putting on heavy risk in the market anywhere. Keep it small. If you get lucky, that's great on your small position, but you don't want to try to be hitting those home runs right now. You don't want to try to say, oh, if I put more money, I'm going to make more money. It's not like that. You're going to want to bet small, and then maybe if the market moves big in your favor, maybe you get lucky and that small trade turns into a big trade. But as long as you keep it small, you're going to have a small loss or break even or a small win or a big win. You're cutting out the big loss scenario. Okay, so keep it small in times like these. Volatility is low right now, and volatility could easily spike back up. Like I was mentioning before, remember these days when the market was halted almost a couple days in a row to the downside? Well, for the last couple months, we've been seeing pretty smaller movements besides the big gap up in the after hours trading. But when we see these big old movements again, we know volatility is back, and that could easily happen because our real point of control area is all down below. Okay, it's all down below. Okay, we're not just going to bounce and go straight up. I don't think this is going to be a V spike straight back up. Even though we do have gaps to fill up here, it's hard to say it's going to be a V spike, even though the QQQ or the NASDAQ almost pretty much V spike. So you would think that the other sectors would catch up to these, but in my opinion, I don't think they're going to, but they could, and that's why you need to be able to play both sides of the market. If you see bullish activity, you don't want to just be bear. So just be careful, bet small, and we will see how the rest of the week plays out. Another Tesla's been going back and forth on this in this zone. It's been hovering around the top side of the zone. It's flirting with this little channel that I got going on here. It looks like it's coming down. If we look at some studies here, you could also see the MACD is rolling over now. The histogram's getting stronger. The RSI is coming down. This, in my opinion, is a perfect short Tesla. I added to it, but hey, I've lost so much goddamn money in Tesla. Who knows? I'll probably continue to lose that money, but hopefully this time I'm right. Hopefully we do get a big move down. I'm talking big move, dude. Tesla does not deserve to be at $805 a share. That is for damn sure. Freaking car company. Oh, they think they're a tech company. It's fucking bullshit in my opinion. And Tesla is all fake as hell. So that is my opinion on that. Okay. So the video is done, guys. If you have questions, have comments, Want to criticize me, go for it in the comments, but make sure you like the video no matter what. Let me know you're watching, and you guys have a nice day, and I'll talk to you soon.